back to the channel. I'm a little under the weather, so it might be a little off, but let me know how the sound is. All right, so we're taking a look at Tesla here. Tesla is starting to break the trend on the upside, and we're going to go over the news. We will hit the macro also, so you guys are aware of, here we go, aware of, what's going on with the macro going forward. So you see Tesla's breaking this trend right here that I got drawn. It's very strong. And, there's a lot of reasons for it. It's starting to actually gain a lot of momentum. So if we take a step back to the daily chart, right, take a step back to the daily chart, we can see that it's forming this big flag pattern, right? This is a bullish flag pattern. When you see the price come from the lows and start to flag. And so we're looking for this big breakout. Somewhere around 250, I think, is the big breakout. But on the smaller, if we zoom in a little bit, you actually see that Tesla is breaking another wedge pattern, right? So as it breaks this wedge pattern, this is your confirmation. It's off to the races. So the question is, why are we seeing Tesla break off to the races, right? Why are we off to the races here? Well, let's take a look. I got this on my Twitter, so if you want to take a look on there, you can look. All right, so let's jump over to the news. So this is why Tesla's really starting to break out, in my opinion, anyways, right? Basically, you have, I guess it's kind of hard to see here. Well, you got Cybertruck November 30th, right? It should be November 30th. Cybertruck is coming out. Everybody's hyped about Cybertruck. There's a lot of people in line to purchase it. It's different. It's a different vehicle. Nobody knows how it's going to actually play out. But you do have Cybertruck. I think the bigger news here is actually the fact that Tesla is increasing. They've increased it. Where is that? Tesla has increased, there it is, Model Y prices in China twice. So they've increased the Model Y prices. And remember, big investors, right? Wall Street is concerned about prices bottoming, margins. So now that they've done, let me see, Tesla has increased the price of the Model Y long range in China by $280 USD. This is the third price increase or price hike in the last 3 weeks. So margins have bottomed for Tesla. That's exactly what Wall Street wanted to see. So we're seeing Tesla explode. We're seeing Tesla explode here. Some other news, the other OEMs, the other EV makers, they're faltering. They're not, this is back in what is this, 2022? Volkswagen could sell more electric vehicles than Tesla by 2024. Yeah, right. All FUD, fear, uncertainty, doubt. Volkswagen says its core VW brand is no longer competitive. Everybody's falling out of the race. They're all falling out, and Tesla is gaining momentum. All right, so that was Tesla. That's what we're looking at for Tesla. Now, moving over to the macro, right? Moving over to the macro, what do we see happen in the macro landscape? Well, number one, I think the most important thing we're seeing here is the market is breaking out. Amazon announces new AI chip as it deepens NVIDIA relationship. So I know people are, concerned with consumer spending, but the truth is big businesses, the big corporations, Amazon, Apple, Google, NVIDIA, whoever it is, they have the most money. They're going to spend the most money on AI to create more revenue, to increase productivity. So the market is looking forward to a better future, period, right? That's just a couple news. That's just small news from Amazon. Also, read Black Friday, well, Cyber Monday. Cyber Monday sales break records. So we got Friday breaking records, Black Friday breaking records. Now we have Cyber Monday also breaking records to kick off the holiday season. And from my understanding, this has only been 2 days of spending out of 10, right? So there's a lot more spending to come from consumers for the holiday, which is why we said, hey, we're going to see a Santa Claus rally because consumers are going to keep spending. You really got to look out to Q1 or Q2 2024 to see that slow, okay? Now the Fed, what is the Fed saying? They're confident that policy is in the right place. The Fed is done hiking. As we've said, the Fed is done hiking. Inflation is done. It's not going to go up. It's not going to continue to accelerate. Pucho 209, go ahead and throw that on the YouTube site so it doesn't get lost in, or you could keep asking. Right, so sorry about my voice. It's down a little bit. But here's what we also got, right? This is Red Book. Oh, no, this is not Red Book. My bad. Let's go back a little bit. So today's macro, what we basically got was, we're going to go over this whole week. Redbook year over year. This is retail sales. So you can go to this website. This is basically the same store sales for retailers. It's all consumer spending, right? Big move to the upside, right? Coming from the lows. So consumers are spending, their confidence is back. Now, is it going to last forever? It'll slow, but this is the perfect conditions for the bond market or the interest rate market to stay low. It's making new lows, right? So consumers are spending, the economy is not going into recession, not yet anyways, right? We're not seeing that. But in the same breath, you're getting an easing of financial conditions. So consumers are spending there. We also have the Case-Shiller Home Price Index starting to reaccelerate a little bit. That's not great. But hey, it is what it is. The Fed is done hiking because something's probably going to break if they continue. Tomorrow is going to be big. We get GDP growth. Okay. The expectation for tomorrow is that it comes in at 5%? That's really strong. So this is a very bullish setup, simply because if GDP comes in strong, then that tells you there is no recession. All these recession fears disappear. But it also gets rates lower. Rates might actually rise if we do see this. Okay, so this is just a really good setup. There's no way you can go but up from here, right? Maybe sideways. When I say this, I mean like the macro narrative is very bullish right now, because we have that. So GDP growth is what we are going to see tomorrow. Now, flipping to before we get to the rest of the week, because we do have PCE, this is where I think the market goes up. So tomorrow we probably get strong GDP. Okay. That's going to cause rates to probably go up a little bit for the bond market to drop off, because it's like, whoa, growth is good, right? We're seeing these retail sales. We're seeing holiday spending better than expected. Therefore, it's very likely that rates start to go up again. And when I say rates, I'm talking about the bond market. Let's switch over to let's go to the bond market really quick. This is what I mean by rates. Okay, this is Tesla, but let's go to the rate market. Here you got 30-year making new lows. So rates are done going up, but if growth is stronger, they could probably push up a little bit. That might stall the bull market. You can see they're making new lows. These are the macro forces. 10-year rates, 5-year rates, they're all making big lows to the downside, pushing up risk assets, pushing up technology stocks, pushing up the market in general. So going forward, rates are going to be lower. You also have the dollar falling. This is risk on. Remember, we've been talking about this. This is risk on behavior from the dollar. So markets are going up. Excuse me, I won't do this for too long. I don't want to lose my voice. But what up, Hassan? What up? Yeah, no problem. Thank you guys for showing up. I'll be here. I know that's just my voice that's out. I'm a little under the weather, but we got to keep going. You know what I'm saying? Like, I'm gonna update you guys no matter what. The VIX also tried to spike this morning, and then it came right back down. So what does that tell you? This is a very strong bull market. It should slow down. It needs to cool off. It needs to cool off technically, but on a fundamental basis, it's very strong. A lot of people are caught off guard. We've been telling you there's a lot of cash on the sideline. You also have Bitcoin making new highs again, pushing to that $38,000 level. So Bitcoin is up, right? Very strong. So let's get back to the macro here, because this is what's really driving the market in my view. Okay. So anyways, GDP growth, right? If it comes in strong, no recession, people get bullish. If it comes in weaker, rates continue to fall. Still bullish. Okay. But here, Thursday is where I think the market starts to recover, because I expect core PC, this is the Fed's main inflation indicator, to come in very weak. The expectation on a month-over-month basis is 0.2. Okay, 0.2. I think we're starting to slow here, because this is from last month, and we're gonna go over the future expectation of spending and how that factors in. But spending is probably going to be pretty good, right? I want to see the core year over year. So this is this is what I want to see. This is falling. This is core on a longer term basis. It's coming down. Core PC is coming down. The expectation, what are we at? 3.5. So it's falling by 2 basis points a month, which puts us in the twos somewhere in Q1, Q2. So inflation is falling. This is going to fuel the market further because people are position negative. They expected inflation to keep going up, and it's not. It's just not happening, right? Now, I want you to show you guys the business cycle. This is the forward-looking growth here. The ISM on Friday. The Fed speaks also. This is what tells you which way this is the main indicator to tell you the direction of growth in the economy. So check this out, right? In red, you have GDP growth. And then in black is the ISM manufacturing business cycle indicator, right? When the business cycle bottomed, it had been coming down all year. Growth fell. It was kind of stagnant, but the ISM actually went up. It spiked from 46 to 49. Okay. That led the GDP, that leads GDP. That's forward looking data. And all of a sudden GDP comes out hot. So this is leading our growth indicator. It is coming down. It's telling us that Q4, right, the next couple of months are actually going to be weaker than Q3. But with all this spending, I think it's going to come back up. And this is on Friday. So we're going to see on Friday where growth is headed. The ISM tells you where growth is headed. This is the ISM, ISM manufacturing. This tells you where growth is headed. Okay. As long as growth does not continue lower, it's not going to continue lower. Manufacturing isn't that great, but services are going to continue. All this consumer spending is pumping services, right? So we get services later on. Chair Powell is going to speak. He's basically going to say that, hey, we're going to stay tight. They're going to ask him a lot of questions about, are you ready to cut? The market is pricing in cuts on in May and March. Are you going to cut? And he's probably going to, that's going to be key to listen into that. We'll be live on Friday. Hopefully I got my voice back, but we'll be live. Now the ISM services, this is why the economy hasn't collapsed yet, because services have been strong. They're staying above the 50 level, right? We haven't been in a recession at all. It is coming down, but with this record online Cyber Monday, Black Friday sales, I expect services to come back again pretty strong. Okay. Are investors getting greedy? Sure. All right, thank you guys, appreciate it. I know it's kind of hard to hear me. I'm off a little bit, but I'm just giving you what I'm seeing here. Now check this out. I'm gonna stop. I'm gonna refer to a video really quick. Okay, we're gonna jump over to the video. Then we'll do some technicals. See if I missed anything. People are over positioned, so FYI. I expect to pull back. There's a big FOMO into the market right now. We're seeing a lot of FOMO. This is CTA positioning on equities. They are up again. I think we get a pullback based off of rates rising tomorrow, because I think spending is going to come in very strong. And I think rates are due for a bounce, and the dollar is due for a bounce. Okay, this is the macro forces. We're in an uptrend. Okay, we're still in an uptrend here. When it comes to the S&P, let's just look at the Qs. We're still in an uptrend, but we are we're pretty overbought at this point. Okay, we're overbought. Can we go higher? Sure. Actually, let's jump to this one. Okay, so we're overbought. We're up a lot. Okay, when I throw on this is the overbought signal, it's actually showing a bearish divergence. Okay, so we either move sideways this week or we pull back to some degree. It's going to pull back, or it just moves sideways, right? We're just holding on to this level right here, 386, 385. I don't know what's going to happen, but I expect some weakness or consolidation all the way into Friday. Okay, but here's why I think we pull back going into the end of the week. The dollar is extremely oversold. It's going to bounce. The dollar bounces. That's going to push the market down. That's a headwind. So this is creating the market strength. But when it goes up, the market's going to pull back a little bit. I expect to pull back into Friday. We're getting a big, strong run up in a lot of stocks before the real data hits. So I expect the dollar to go up. I expect 10-year yields to push up again. They're almost oversold going into Friday because we're getting a lot of stronger than expected data. But I don't think the trend changes. It's just going to push up, and then it rolls over again. The bull market continues into the year-end rally. It continues into the year-end rally, okay? So Qs, what happens with the Qs? Well, I think they have some room to consolidate here. Let's just remove this really quick. Pull up a highlight. So yeah, we got a little top. Oh, not that's not the one I wanted. We got a little top here. Okay. I think we just consolidate, and then we get all the data this week: GDP, the consumer, the Fed speaks, ISM, and I think we just consolidate. I don't think we really pull up, but we are seeing individual stocks move higher. Individual stocks are moving higher. We see Tesla breaking out, probably Amazon. There's a lot of good stocks that are starting to break now, but we're looking at the overall market. It's going to consolidate. I don't see a real big pullback unless let me see, inflation's not going up. So all the indicators tell us, even the VIX is making new lows. All the indicators tell us that this is going to be a melt up into year end. And for everybody that thinks we're going to go into a deep recession, Joe Biden is going to print more money. He's already, all that debt that is being printed by the Treasury is going to be spent into next year. It's going to be spent. Supply chain restructuring, onshoring. So they're spending all that debt that they're collecting. That means more economic activity is going up. So if anything, you're going to get a small pullback, a consolidation in the market. Technology is going to lead. We've been saying this all year. Tech is going to lead. And everybody's like, oh, what about these small companies? Nobody cares. They're getting rotated out of. People are rotating out of weakness and they're adding it to strength. Who's going to benefit the most? Who knows? I think it's Tesla. I think Tesla has a chance here because everybody else is starting to barf. All the other OEMs are starting to barf. They have full self-driving. They have Cybertruck. They have the tax credit. They have the energy storage business. Tesla is set. Out of all the Magnificent Seven, Tesla hasn't even made its big move yet. It still has a lot of room to run. The breakout area is around 250 in my view. 250 is the big breakout. I mean, if you go on a smaller time frame, it's probably going to break out. But you have a lot of room to break out here. We go to 300. If the Qs continue year-end rally, Tesla can push to 400. Easily can push to 400 going into February. I think this rally continues in the Qs into the SPYs all the way till February. February, we probably get the slowdown. There's going to be a lot of, that's when the next earnings start to show up. And yeah, I think we're going to rally into February right now. That's what I'm looking at. But let's take a listen to these retail sales so you guys can see it yourself. Okay. I'm going to throw on the retail sales video really quick. So for everybody that tells you that this is just FYI, everybody's telling you, hey, consumers are weak. Consumers are weak. They're not weak. You're being misled. You're being misled. The consumer is very strong. If they slow, it's going to be in Q1 of 2024. Q1 or Q2, a slight slowdown and then a continuation. But this is the consumer right now. Let me know if you guys can hear this on. Let me make sure you guys can hear this. Hold on. Hold on, give me like 10 seconds. Let me get some tea really quick. My voice is not going out. We're gonna play this video in a second. Give me 1 second. All right, yeah, here we go. This is the consumer.
U.S. consumer doing more and more of their spending online. Shoppers spent a record $12.5 billion on Cyber Monday deals yesterday, up nearly 10% from a year ago and surpassing the initial $12 billion estimate.
Okay, there's your growth. There's your consumer growth. The consumer is not slowing. That's what they're telling you, but it's not happening. The consumer is not slowing down. People are spending. Prices are up, but people keep spending. So just get that through your head. People are making crap up. Good. I'm glad you guys can hear. Thank you. So yeah, let's go.
Cyber Monday spending is now bigger than Black Friday, in fact, which was around $10 billion this year. And it all comes as consumer confidence finally showed some improvement this morning, but expectations remained at recessionary levels. Joining us to talk more about all this is Steve Odland. He is CEO of the Conference Board. Steve, welcome. So, we were just talking about kind of Fed officials and rate hikes and all the rest of it. From where you sit and what we learned this morning about the consumer, what would you tell us?
Well, after 3 months of consumer confidence declines, we got the bounce up here in November that we kind of were expecting, and that's really good news. They're still worried about rising prices, especially on food. They're worried about, what's happening in the Middle East and what's happening in Ukraine. They're worried about interest rates. But look, gas prices over the last 2 months are down 16%. That's huge, and we see consumers spend based on, week to week, what they have in their wallet. And when they're relieved from having to put the money into the back end of their car, they can spend it on other things. And this is what's driving, we think, Cyber Week. Cyber Week is up nearly 8%. Cyber Monday was huge, a record level.
All right, so I want you guys to check this out, right? So there was 3 months of declines, right? Now the consumer is spending again. This was the year-end rally. We still have a long room to go. Concerns are rising prices, but we know inflation is coming back down. It's not the absolute price, it's the rate of the prices going up. So for the consumer, yes, prices are still elevated, but the stock market is looking into the future, 6 to 12 months ahead. And it's seen that inflation is coming back down. We're seeing deflation in some areas, disinflation in a lot of other areas. The market can go higher. Rates have peaked. The Fed is done. And we're going to get that confirmation on Friday when Powell speaks, and they're gonna ask him, hey, are you gonna hike again in December? There's no way. Excuse me. The war, this is another tailwind for the market. The war is not going higher. Not going higher. The war is not materializing any worse. As a matter of fact, I think Hamas and Israel are negotiating, they're speaking. So a lot of these risk off concerns are starting to come off. And, the market can continue to climb from here. CEOs, like the big companies, Apple, Amazon, Google, Meta, they are gaining profit margins here. Okay, they're gaining profit. The market is changing. It is not the 2008, 2001. Value stocks are not going to win this war. It's going to be growth stocks that are innovating, that are changing how things work, that can increase their productivity, that are using AI. So you're seeing a shift here. It's the old legacy systems are slowly going to die as we head into the new cycle.
Season expectations are stronger now because expectations for gas prices and inflation is more subdued. So all of that leads to good news for the consumer. Interesting stats, though. People are buying on their phones more than ever before, more than even a laptop. So they're doing this on the run, which is probably a good thing since Sunday was the biggest travel day ever. Everybody was stuck in their cars and stuck in airports, and no wonder that they're buying on their phones. But this is a big deal for the holiday season. We weren't sure what was going to happen, but feeling more bullish here.
What's the deal with the expectations component here, Steve Odland?
Yeah, so there's two components to consumer confidence. One, how are you feeling right now? And people are feeling pretty good about their job situation and so forth. But most consumers, as well as 70% of CEOs, still say there's going to be a short and mild recession. So you still have that sitting out there. Nobody's quite sure, as Steve Leisman said, nobody's quite sure on whether the Fed's done, when the rate cuts are going to happen. You got all that uncertainty out there, and the consumers are feeling that as well.
Steve,
this is like literally the perfect scenario because everyone says consumers are over their heads. No, they're anticipating a recession. So they're not going to overspend. Americans overspend, but they're not going to overspend. Oh shoot, we got a new CPI forecast by the Fed. That's going to be good. I want to see that. So consumers are not overspending, but they're spending online. So Amazon is going to benefit. A lot of the retailers, when you see this company is losing revenue, guess what? That revenue is converting over to e-commerce companies. That's why. So everybody looks at the overall market and sees all these small cap companies failing. Duh, that's going to happen. The revenue The earnings, the profit, the spending is rotating from those who cannot survive to those who can survive in this new environment. The overall GDP is not falling. It's just moving from one area to another, right? That is the case here. And as long as people have jobs, as long as they're employed, this market will continue. They'll keep spending. They might slow in Q1, and as soon as they slow in Q1, you're going to hear recession, recession. Oh my God, here it is. But it's a slowing. Things don't go straight up. You're going to get a slowing, that slowing effect, and then a rebound there. What do we got here? I think we had a couple. The market spiked up. It's going to consolidate. The market will consolidate. Let's look at some of these tech companies really quick. I haven't even looked at the overall market. So IWM, I mean, it is gearing up for another breakout. IWM is gearing up. I don't know if IWM really goes up, though. I'm not too confident, just because here'd be the breakout. I'm not too confident because they don't have the strongest companies. They don't. It's going to be the Qs. So I think it's healthy if the Qs do pull back a little bit. They should pull back. But again, going into Friday, I think we sell off a little bit before we go higher. We should sell off, I think, tomorrow as rates bounce, as the dollar bounces. And then that'll be the opportunity to scoop up more shares for these big firms. I would say down here at about 386. We'll probably come back down to 386 on the Qs. And then we go higher from there. Let's see. The rich get richer, the poor get poorer. Exactly. That's why you got to invest. SPX just dropped hard at 12 noon. I should have gotten a put. We'll see how things play out. We'll see how things play out. But Tesla is definitely starting to break this trend. Now looking over at crypto. Is it crypto that we're looking at? Yeah. Taking a look at crypto really quick. I mean, Bitcoin is basically like, this thing is going to really rip when the Fed comes out and confirms that they're done. It's going to rip. So there's not much to say here. It's just the Bitcoin ETF. Again, people don't understand. You're getting a lot of demand coming into the market, anticipating the liquidity cycle that is about to turn, right? The liquidity cycle is about to turn. So if I were to look at the most bullish reason for the market to continue, it's going to be because the risks are gone, right? The VIX is under 15. So when you get a VIX under 15, you get a melt up. There's nobody buying, insurance against the S&P 500. It's just not happening because it's too optimistic. There's a lot of cash on the sideline. Bond volatility is coming right back down. So there's no worries about the bond market, the treasury market. Nobody's worried about it. It's just not a worry because growth is now slowing. So it's the perfect scenario. Okay. And if we look at triple B spreads, they're making new lows. This is a big risk on, This means that investors are buying more equity debt than treasury debt. They're more bullish on corporate debt, than they are on treasury debt. This is not a reflection of a big looming recession. It is just not. This is what people are doing, not what they say, not what's being said. So HYG, this is one of those fixed income. How do I put this? This is one of those fixed income instruments, and people are buying fixed income from equities. Okay. What else we got here? Gold. Gold's okay. You're not getting commodity inflation. Let's see what commodities are doing really quick. Nvidia is probably going to recover here. Yeah, once Nvidia gets going, it's going to be over. Once Nvidia gets going, you got AMD already breaking out. I'm trying to see who's moving here. Coin is probably going to look good. Either way, those macro forces are starting to turn very risk on. And I would just look out for that. Oil's going nowhere. This is another big indicator. If this changes, this could, be a little more bearish. So if oil does start to break out again and go back to like 90, then, the market's going to slow down. But as long as oil moves sideways, As long as oil moves sideways, there's zero inflation expectations, right? You guys already see gasoline prices are falling not like super fast, but they're falling. Gasoline prices are down. That also aids the consumer. That also helps the consumer a little bit. So everything is working. It's a really good scenario. It's a really good setup here. And yeah, going into tomorrow, you have GDP, and then you have the consumer, then you have the Fed. It's a really good bullish setup. What I'm looking for is I'm looking for a little bit of weakness. I'm looking at Tesla, but I'm looking for a little bit of weakness in the market tomorrow because this is it. It's breaking out. It's starting to break out now for Tesla. I'm looking for some weakness, a retest of 240. This was the gap that was closed, 242.50. That was the gap. Let me see if I could draw it. This gap right here got closed. So I'm looking for a retest of that gap. If it holds that gap, it's going to start breaking the bigger trend. And then we're going to like 300 in my view. That's just what I think is going to happen here. So I'm looking out for that. And let's see what sectors are leading. I haven't took a look at sectors for a while. Oh, how many stocks are moving? You got 74% of stocks moving above their 50-day moving average. So breadth is back. Market breadth is back. There's breadth that is going up. 300 is the lowest for Tesla. I think the bottom is in for Tesla. I mean, margins are in, so it should be moving higher from here. And then I know some people are worried about the yield curve inversion, but it's not like the past. We're not looking at the past here. Let's see who is the strongest. Energy, XLF, ITB. Okay, yeah, retail is starting to make new highs here also. We got the retail ETF. This is just an indication that, the consumer is not falling off. The consumer is fine. Well, I'm losing my voice. I just want to let you guys know that tomorrow we are doing hopefully I got my voice back. We'll be looking at real estate. We'll be looking at how to get started in real estate. Here's the thumbnail. I'll give you a sneak peek. Go subscribe on the YouTube. So we got Tanner Max here. We're going to go over how to leverage real estate in 2024 because that's going to be the opportunity for real estate as rates start to come down finally. First-time home buyers, FHA loans, multifamily, commercial, the whole process, right? We're going to be looking at the whole process and just how to take advantage of it, the tax benefits, all that. We'll be talking real estate tomorrow. Any chance to add to Chainlink? Yeah, Chainlink, whoa, what the heck happened there? Take a look at Chainlink really quick. Still actually, I think I have it up here. No, guess not. Yeah. Well, Chainlink's holding up, man. Chainlink's holding up. You could have added last night at this level. It's really hard to tell, but the fact that it's accumulating and holding above 1250, I think the best for me personally, 13 would be great. I don't know if it comes down to 13 though. Right, 13 would be a great zone to get some Chainlink because Chainlink has the best narrative in the whole crypto market. Just wait till crypto starts roaring. It's going to be pretty insane. And crypto just cares about liquidity coming back. And global liquidity is turning up. So when we do look at global liquidity, let's just throw Bitcoin up here. Take off Fed funds, RRP. Shadow QE still going up. All right, so this is the key. I think this is really going to be the key here. Let's see if I get this thing to look better. All right. Oh, no wonder it's on the 3-month chart. All right, so this is Fed net liquidity and then global liquidity. This is why really risk assets are set to boom because global liquidity, all central banks in the world, money supply, This is what moves markets is liquidity. The amount of liquidity coming into the market now that we're at recession, we're leaving the recession. We're in a recovery phase, right? This was the tightening. The tightening is done. There's no more tightening. Inflation is pretty much defeated going into 2024, right? And there's no, everybody said, I hear a guy saying inflation's coming back. I don't see it. It's not coming back. Inflation is done because productivity is picking up. The supply chains are healthy now and global liquidity is picking up. This is going to fuel crypto. This will fuel crypto. Okay. This is going to fuel crypto. And then if we just look at the Fed net liquidity, so we focus on the Fed, now Fed liquidity is picking up. Once it starts to lift, crypto is going to go ballistic. Bitcoin probably goes to 50K really quickly, especially with the ETF. And then again, looking at Chainlink here. Okay, Chainlink is consolidating here in the red. As liquidity conditions continue to rise, crypto is going to boom. And I think Chainlink has the most upside by far as a secure asset. All right, well, I'm going to get going. I can't really talk for too much longer, so I don't want to lose my voice. Hopefully it comes back this evening. But I do appreciate all you guys staying supported. Thank you. Yeah, we'll be back tomorrow again. And if you guys got questions about real estate, like I said, show up. Oh, I guess I didn't show it on the YouTube, huh? Let me show you guys what the thumbnail is. All right, that's what we're going to be talking about tomorrow, how to leverage real estate. And then I think after that, we'll do a little bit of the Fed. We'll talk a little bit about the numbers on GDP. Anyways, yeah, hopefully I can come back quicker because there's a lot of good data coming out. This is a bull market, no recession in sight. The Fed is done. Inflation is done. Economic, we'll get the ISM on Friday to see where the economy is headed. Friday tells us where the economy is headed. Other than that, you guys stay blessed. I'll catch you tomorrow. I think we're doing 12 p.m. Eastern time, 12:15. All right, you guys have a good one. Stay blessed. Thank you.